Did you know that when a company's profits crash by 86%, investors usually panic and sell? But when Nike just reported exactly that, their stock price actually jumped 14%. What's really happening behind these shocking numbers? Nike's latest earnings tell a fascinating story of crisis management and strategic pivoting. We'll dive into why Wall Street is suddenly bullish on a company that just posted devastating profit losses, explore the billion-dollar challenge that could reshape their entire business model, and reveal the surprising bright spots that have investors thinking this might be Nike's comeback moment. Nike's fourth quarter numbers look brutal at first glance. Revenue dropped 12% to $11.1 billion, and net income crashed from $1.5 billion to just $211 million. That's the 86% profit collapse that should have sent investors running. But here's the twist. Wall Street was expecting even worse. Analysts predicted only $10.73 billion in revenue, so Nike actually beat expectations by nearly $400 million. The pain wasn't limited to one region either. North American sales fell 11%, while China took an even bigger hit with a 21% decline. Digital sales, once Nike's growth engine, plummeted 26%. Their direct-to-consumer business dropped 14%. But buried in all this bad news was one surprising bright spot. Physical store sales actually grew 2%, proving that brick-and-mortar retail isn't dead yet. So why the investor optimism? It starts with leadership. New Chief Executive Officer Elliott Hill has already outlined a clear turnaround strategy focused on innovation and smarter inventory management. But the real test comes from a massive external threat that could make or break Nike's recovery. Here's the billion-dollar problem nobody saw coming. New United States tariffs are projected to add approximately $1 billion to Nike's costs over the next year. For context, that's nearly 5 times their current quarterly profit. This isn't just a speed bump, it's a potential roadblock that could derail any comeback plans. But Nike isn't standing still. They're aggressively diversifying their manufacturing away from China, targeting single-digit dependence by 2026. They're also preparing strategic price increases to offset tariff impacts while maintaining their premium brand positioning. The company is essentially restructuring their entire supply chain in real time. The market's response speaks volumes. Beyond that initial 14% stock jump, analysts are upgrading their outlooks and raising price targets. Investors seem convinced that while the current pain is real, Nike's proactive approach to these challenges positions them for stronger, long-term growth. Nike built their brand on "Just Do It," and right now they're proving that motto applies to more than just athletic performance. They're taking decisive action on supply chain diversification, implementing strategic pricing changes, and rebuilding their innovation pipeline under new leadership. The numbers might look ugly today, but sometimes the best investment opportunities emerge from companies that face their challenges head-on. Subscribe for more insights into how major brands navigate crisis and transformation.